Welcome back, folks. I am John Najarian, and this is 3 at 3 as we move into the final week of April. Let's take a look at what we have found, what our team has found as far as unusual option activity. We do define this as large blocks of calls or puts that are trading on the offer. Those are the ones we care about, not so concerned about people that write or sell options, because again, whenever you sell an option, you can only make what you sold it for. But if you buy an option, you could get a leveraged return. And that's why, quite frankly, a lot of the fast money trades that we follow are those large purchases. They're not sales. Now, every once in a while, you find somebody who's selling that just wants to hold a stock. But again, that's not going to be a trade that we're going to follow. Because we're looking for the buyers, the people that are looking for outperformance, that are looking for a leveraged return. With that said, let's get started. I was on the Worldwide Exchange this morning with Brian Sullivan, and we were talking about this. Note that the put that Sully highlighted there, that was from Friday, 5.29 million puts traded Friday. As you can see, the 5-day average, 10-day average, 20-day average of the total of calls and puts had been hanging at about 5.5 to 5.6 million. So we nearly did that in just the puts on Friday. And then if you look at the 5-day average of the puts, which was 3.29 million contracts, and compare that to 5.29 million contracts, you see that that's a massive jump. Some 65% or something like that. So those are pretty close to, and this is what we said with Sully this morning, that when you see that kind of turnover, that is what you're looking at. Not necessarily, folks, at a pivot that means, oh, this is all over, we can just buy everything and it's off to the races. No, but it does mean we're likely to see a burnout of the downside push. And as you've seen from the rebound today, maybe that is what we saw. Because again, another example, this is from this morning. The VIX was higher by 1.37. It was trading 29.50. You see that at the top line of that. And that is the spot VIX. And then if you look down at the expiration dates for June and July, they were basically both hovering around that 28.82 to 28.95. In other words, the spot VIX was higher than those out VIX futures were. That's another sign usually that we have sort of exhausted the move. If we, and I said this last week as well, if we don't see the futures corresponding with the move in the underlying, which last week it was down hard. It traded all the way through 20 to the downside into the 19 handle for the VIX, spot VIX. Futures didn't drop at all. They stayed right there. So today you see a minor move up in the futures with a big move up in the spot. And that's telling us that perhaps that big jump from 20 to 30, that massive spike, that might be another sign of that burnout that I spoke of. And then let's talk about Twitter. These are the Twitter calls that I'm long. I've said repeatedly, I'm long the 46 calls. You see those just from minutes ago, higher by about $1.33. Meanwhile, the 55s and 52s that I'm short, I highlighted the 55s at the bottom of the page, down on the day, with Twitter up by 6% on this takeout by Elon Musk. So you could look further out the curve too and look at the far, even the leaps of Twitter, and you'll see down. Why is that? Well, I think you know. Price is going to be about 54.20. We don't know that for certain, but we know that's what was discussed. So all of those out-month options should, again today, be losing value, whereas the in-the-monies will all virtually converge at about the same price. You should see the 46s which are now deep in the money call, $5 deep in the money. You should see all of them more or less level off at about that same level that you see here, at about the 52-ish valuation, because 46 and 6 is $52 a share. You should see all of them leveling out about like that. Meanwhile, the out months and the others compressing. That's what happens. Just a quick update also to that first part of my discussion with you today. The 324 puts that we highlighted on Thursday last week with the QQQ at 333.96, call it 334. We talked about those 11th of May expiring puts. That's where they were on Friday, up 52%. That top box you see on the page, the lower box with the arrow pointing to the turnover today more than the open interest. So we won't know till tomorrow how many of these puts were liquidated today, but they made a lot of money on this trade. So I imagine most of these were liquidations. It traded as high as 11, these puts did today. I'm out. I just wanted to point out they're still trading basically $9.40, a lot higher than the entry, of course, but that turnover suggests that perhaps there's a lot of liquidation going on. If you'd like to learn more about trading, if you'd just like to hear a whole bunch of great traders talk about it, come on down to Rebelcon 2022. It's going to be in Dallas at the Four Seasons Resort and Club in Dallas at Las Colinas. I'd encourage all of you that want to come to sign up early. And the reason is we're not going to be bugging you much longer about this, folks, because we've already sold a ton of tickets. We only have, I think, a maximum of 500 that this venue can accommodate. It's not as big as the venue in Las Vegas. So this is a more personalized event. We're not going to have 1,000 people. Less than half of that will be able to attend this. And the packages are going fast. So if you'd like to attend, I put the dates up there, September 21st through 24th. Sign up now. Call our team now to sign up, because if you wait, you're not going to be able to join. Everybody's back traveling again, or at least most people. And by the fall, by September, I think it'll be game on. And so I would say you're not going to have much luck with either airfares or tickets to Rebelcon if you don't act now. Let's see, CryptoConvo. Also encourage you to check that out. Those are conversations I have with cryptopreneurs. Just did one with DeFi Technology CEO Russell Starr. That'll be going up shortly. Make sure you check that out. CryptoConvo, just go to cryptoconvo.com. It will also be streaming on a number of sites, including Clicks TV and roundtable.io, with a surprise one coming soon. All right, 3 at 3 starts right now. Charge point, $14.67 is the stock. 20,000 of the next week expiration, May 16 calls. So this is $1.30, roughly, $1.33 if you want to be precise, out of the money. 20,000 is 2 million share equivalent. So that's why we're on this trade. I'm buying the at the monies. You can buy whatever you want. It's your money. I'm buying the at the monies in hopes of selling an upside call against the lower strikes that I own. That's the way I'm going to play it. 2 weeks out means rapid time decay. So be very aware if you're following us into this trade. Second, another week further out into the future, but nonetheless, still a lot of pressure. And this is bullish for a change. I showed you those bearish trades that we took advantage of a week ago, the Thursday, the 21st. Well, now they're coming in with bullish trades on the QQQ. 10,000, that's 1 million share equivalent. The 13th of May expiring, 350 calls. Now, I will be buying and have bought the at the money call. You can buy whatever you want. You could buy those out of the money calls And if we have a fast move to the upside, you will be rewarded. If we have a slow churn to the upside, you could lose, which is why I'm buying at the money with the intention of selling above the market, above where we're trading against it. I always do those 1-to-1. I have no upside exposure if I do that. Neither will you. But again, I can't pull the trigger for you, folks. You have to decide if it's an appropriate investment. I'm stressing again, though, that it is a decaying asset that is in the fast portion of this options life. So be very aware of that fact. Finally, Lowe's. Bearish. I love the company, but boy, I have to point out that somebody wanted to buy out of the money puts against it. Now they bought 4,500, which is 450,000 share equivalent. They're nervous, perhaps about guidance. I don't know. But I do know that I believe earnings will occur during this cycle. So be aware that somebody bought a $17, almost $18 out of the money put. Does that mean that they just want protection? It could, but they bought a lot really fast. And that's something we like to pay attention to. But could it be a large holder of the stock that is just putting a floor on this so that they can sleep at night and hopefully let it run to the upside? It could be. But again, when they buy these puts in big numbers, that's why we are nervous about the downside in this name. I was buying I want to say the 195 puts and look to sell the lower strikes against it if we start softening up in the case of Lowe's. Not rooting against them, folks. Just saying, when they buy puts, I ride right along with them, just like I do with the calls. All right, that's going to do it for us today. If you'd like to check out Market Rebellion offerings, you can go on over to marketrebellion.com/get started. That's marketrebellion.com/get started. You can check out mentoring programs we've got. You can also check out a host of other offerings, such as coaches and stock options and crypto courses offered online. Check it all out. I'll see you tomorrow.